This is your accounting teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve question of A2 accounting from International Accounting Standards. And as discussed earlier, International Accounting Standard is a difficult topic because we have numerical questions coming in the paper from this topic again and again according to the current syllabus. So it includes IS 10, IS 36, IS 37, IS 18, IS 18, IS 8, and IS 16, and some other IS are a part of that. So today we are going to solve a question of A2 accounting from International Accounting Standard, and the question is from May-June 2432. So let's see, May-June 2432. The question is right in front of you. This is the insert given. Source B from question 2. An accounts clerk from W Limited Company has prepared the draft statement of financial position and draft statement of changes in equity. Non-current assets, current assets, total assets, then equity, non-current liabilities, current liabilities are given. Statement of changes in equity is also given in the question. If you just look at the statement of changes in equity, the retained earnings at the start, profit is there, but bonus issue, you know that bonus issue should be the amount for the bonus issue should be taken out of share premium first, right? And then we will use retained earnings. But here, some amount has been utilized from the share premium and the remaining from the retained earnings. So that is a problem in the statement of changes in equity. We'll discuss that. The dividend proposed is written in the statement of changes in equity, which is not there, should not be there, because proposed dividend, it won't come in the statement of changes in equity. Rather, it is not recorded in the books. So this question has come in May-June 2432 this year, and the grade threshold has decreased to 42 because of the same question, because of this question. It has been decreased to 42 out of 75. As the result is coming on 9th January for A-levels, so again, I'm telling you that the grade threshold will remain the same. It will remain at 42 for 75 out of 75 for paper 3 because of the question of partnership changes. Because there is no question of IS in our current variant. The company accountant found that the errors had been made in some items. Further information is available. Land and building with land costing 175,000 and building costing 80,000 were purchased on 1st January 2022. The company policy was not to depreciate land or building. In March 2023, the land had been revalued upward by 35,000. For the year ended 31st December 2023, the company decided to adopt the following new depreciation policy to be applied from the date of acquisition: land not depreciated, building 2% on cost. The accounts clerk had not implemented the new depreciation policy. So if you just look at the question paper, the first part explain how to correct the errors made by the accounts clerk in relation to the depreciation on building and valuation of inventory. Support your answer with calculations and with reference to the relevant informational accounting standards. Use the space provided to show your workings. Depreciation on building has been given, and the amount is 6 marks. Depreciation is given. The calculation which is required probably. So let's do that. I will move to the insert again. So if we just look at the question, land and building with land costing 175,000 and building costing 80,000 were purchased on 1st January 2022. We are solving the question for 2023. Remember that we are solving the question for 2023. So here comes an accounting standard known as IS 8. I will explain that with you first. IAS, you can write it down also along with me. IS 8, which says it is accounting policies. The name of the standard is accounting policies and changes in accounting estimates, changes in accounting estimate and errors. Accounting policies and changes in accounting estimate and errors. It says that if an error has been committed and it has come to know that you have not uh, draft the financial statements or adjusted the financial statements because of those errors, the adjustment has not yet been made, then you have to adjust the financial statement retrospectively or prospectively. So I will write here that accounting policies changes in accounting estimate and errors. It suggests, right, that a new accounting policy should be adopted right? That changes in accounting estimate and error, a new accounting policy should be adopted or applied, adopted and applied retrospectively. What does it means? I will give you the example and then you will be able to understand it more easily. Retrospectively and prospectively. ROS, right? So depreciation on building, if you just look at the question, because the question has asked us to go for the correct treatment of depreciation on building, just look at the question again here. Land and building with land costing 175,000 and building costing 80,000 were purchased on 1st January 2022. It means that in the last year we have purchased, at the start of the last year we have purchased this land and building. Okay, that's fine. At that time, the company policy was not to depreciate land or building. We know that land will not depreciate because it has no useful life. But in March 2023, the land had been revalued upward by 35,000. So there is a revaluation reserve regarding land, right? So land will be debited because it is a non-current asset, and the revaluation reserve is going to be credited because of the amount of 35,000. But for the year ended 31st December 2023, the company decided to adopt the following new depreciation policy to be applied from the date of acquisition. Land not depreciated, building 2% on cost. The accounts clerk had not implemented the new depreciation policy. Now the things have been changed. We are going to adopt the new depreciation policy in 2023, where we are going to charge depreciation on building at the rate of 2% on cost. Obviously, if not nothing is given, it means that it is annual basis. So we have to charge depreciation on building 2%. And remember this, that building has not been revalued. Land of 175,000 has been revalued by 35,000. So it has nothing to do with the building. The revaluation reserve has nothing to do with the building. It is the building which needs to be depreciated, and it has not been depreciated in the past. So the treatment which comes into your mind is that, sir, okay, it's quite easy, sir. You just start depreciating the machinery. So the cost of the machinery is 80,000 and 2% of the machinery is going to be how much? 1,600. Right? That makes sense. It's quite easy. Right? But the problem is this, that whenever there is an error, then we have to adopt the accounting policy retrospectively. Retrospectively means that we have to adjust the previous financial statement, the adjustment, the error correction of the previous financial statement along with the current year adjustment. It means that the treatment of this depreciation should be given in 2023 and will also be treated in 2022 retrospectively for both the years. So how this treatment is going to be made, that's what I'm going to tell you, that this 1,600 of depreciation, which we have calculated on the cost of building 80,000, 2%, that is 1,600, right? It will be subtracted. It will be subtracted from current year profit, obviously, because the depreciation should have been charged for the current year. So it will be subtracted from current year profit, right? And will also be subtracted from previous year retained earnings. from previous year retained earnings. Why? Because we have to adjust the financial statement of the previous years accordingly. Means the depreciation on building, though the depreciation policy has changed this year, it means that the previous year, this should have been applied in the previous year also. So we are going to give the impact of this adjustment for both the years. The problem is this, that previous year profit we don't know. So the previous year retained earnings is going to be adjusted, and previous year retained earnings are, let me make you see, previous year retained earnings, which is the balance on 1st January from the retained earnings account, is 151,000. So the correct retained earnings of the previous year will be 151,000 minus 1,600. How much it will come? That is 1,484,000, if I'm not wrong. 1,494,000, sorry. So 1,494,000 is going to be the, yes, correct retained earnings at the start, because we have to give the effect retrospectively. And if we talk about the profit, 1,494,000, the profit will be, what is the profit? That is 122,000. Profit for the current year. So we have to give the statement adjustment accordingly. 122,000 minus 1,600. So what will it become? So both needs to be adjusted. That will become 121,400. So the profit is going to be 120,400. Okay. Yes. Okay. So profit we have adjusted also. That is going to be 120,400. There might be some other adjustment also. We'll discuss that in detail. Okay. Now, both of these adjustments needs to be subtracted from the cost of the non-current asset also. So let's see the cost of non-current asset. That is going to be 642,000. So building is a part of 642,000. So the non-current asset will be 642,000 minus 1,600 for the previous year and minus 1,600 for the current year. So the depreciation for both the years will be subtracted from the non-current asset, and the financial statements are going to be adjusted retrospectively. This is the concept we have studied according to this standard, which is known as IS 8 accounting policies 638800. Accounting policies, changes in accounting estimate and errors. Next point is basically the second point, that how with reference to the valuation of inventory. We have given the valuation of inventory portion also. So let's discuss the what we are going to do with the valuation of inventory. So let me move this. So valuation of inventory is given already, like here. The following information is from the inventory records on 31st December. IS2 says, International Accounting Standard 2 says, the inventory is valued at cost or NRV, whichever is less according to prudence concept. So cost is given, but we have to value the inventory at cost or NRV according to each category of the inventory given, like A, B, and C separately. Second thing is given in the question is this, that if you just see the question, that the accounting clerk has used the estimated selling price of 54,000 for the inventory value. But we have recorded in the accounts, we have recorded inventory with an amount of 54,000. Rather, the inventory should have been recorded at cost or NRV, whichever is less, because the selling price is 54,000, but there is going to be, to sell the inventory of each category, a sales commission of 5% on selling price is required. So NRV is estimated selling price minus cost to sell. So minus cost to sell is going to be 45,000 minus 5% of 45,000. How much it will come? We will calculate that. 2250. It will be subtracted. And now the NRV is 30,500. So you can easily suggest that which is the higher value, the same, both the same. So 30,500 I will take. Next 59,000 and 6,000 minus 5% is 300. That will become 5,700. So 5,700 and 5,900, NRV is less. So I will write 5,700. Now I will take 5,700 rather than 5,900. Okay. Then again, 3,000 into 5%, which is the selling cost. I will subtract 3,000 minus selling cost. So NRV will be 2,850. Now I have to compare what NRV with the cost, whichever is less. 3,800 and 2,850. The lesser price is 2,850. So I will take inventory as 2,850, which is the lower of the two, cost and NRV. The total of this will be should be the value of inventory. If we go for the total of this will come 3,9,050. But unfortunately, we have recorded inventory as 54,000, which is wrong. So it means that we have to reduce the inventory 3,9,050. We have to reduce the inventory by how much? Yes. So we have to reduce the inventory by 14,950. And there is going to be inventory for entry for that 14,950. And you can pass the entry for that also. What will be that? Cost of sales is going to be debit with 14,950. It means that we have to subtract it from the profit, and closing inventory is going to be credit with 14,950. So it will be subtracted from the closing inventory also. This is how the IS2 will affect the valuation of inventory. So the correct value of inventory is 3,9,050 rather than 54,000. So in order to correct the valuation of inventory, we have to we should take the individual category, and profit will be adjusted, or amount will be subtracted from the profit. Profit will be reduced. Okay. So we are done with these two particular concepts, which has been asked in the question that you need to find this. We are done with that. Okay. Next is that he is basically asking us to prepare the correct statement of changes in equity. So let's prepare that. The question basically required us to prepare the correct statement of changes in equity, right? So let me cancel it out. You have to remember this 1204 00 and 149, because we have to use that in the future. These adjustments we have made also. So let's prepare statement of changes in equity, right? So we will start from ordinary share capital. Then there comes the share premium, if given, obviously if given, but there is share premium. Then comes the general reserve. I think general reserve is not given in this question. Then we have revaluation reserve, and then we have to go for retained earnings. Right? So let's see the balances first. Because the statement of changes in equity they have prepared, which is not actually up to the mark. There is a problem in that. So balance, we will go 4,32,000. Let me write it down here. 4,32,000, which is the premium. Then retained earnings, as we discussed earlier, we have to change the amount of retained earnings. The new amount of retained earnings, how much it is going to be, we have calculated there, is 149,400. There is no revaluation reserve, but the amount of retained earnings is going to be 149,400. Right? Yeah. Okay, I will subtract all these things now, because I have to prepare the financial statements, because we have already calculated that 1,400, this is the entry, cost of sale to closing inventory. After the correction of the inventory valuation, we are done with that. So I'm going to wrap it up. Now we have to prepare the statement of changes in equity. Sir, where it is written, let me check you. Let me make you see that. This is the requirement, that you have to prepare the statement of changes in equity and the corrected balance sheet. This is what we have done. Prepare the corrected statement of changes in equity. Total column is not required, and the corrected statement of financial position, right? So we are dealing with that. But let's discuss about the next parts also. On 1st March 2023, the company issued 60,000 ordinary share of par value of $1 at the price of 1.3 each. So it means there is premium. 60,000 into 1 is the share capital, but 60,000 into 0.3 is the share premium. At the same time, a bonus issue was made of 1 for 10 share held immediately before that date. It means the bonus shares are issued, should not be issued on these 60,000 shares because they are issued before that date. The accounts clerk had used the issue price to record the bonus issue. But unfortunately, they have, for bonus share, they have used the issue price of 1.3, which is wrong because bonus share are always issued at par value, at face value. Accrued debenture interest of 2,000 was included in the value of 8% debenture. So obviously, accrued debenture is an interest is a current liability. It should not be recorded as with the debenture. So we will subtract the amount from debenture and we will write it in the current liability. Like see, I will make you see that the 8% debenture is written 52,000. It is 50,000. 2,000 is it should come in the other payable because it's a current liability, right? Then we have other payable of 63,000 included the proposed dividend. Proposed dividend, we have to subtract proposed dividend from other payable because that is also not a part of the. No, will not be subtracted from profit because accrued debenture to was included in the value of 8 debenture. This is the error made in the debenture only. It has nothing to do with the profit. They haven't said this. And it has recorded in the books. It's not like that. They are just writing that it has been written in that way. So we have to adjust accordingly. So let's see the profit first. The profit we have to calculate. And the profit for the year is 122,000. You know that. 122,000. First, I need to subtract 1,600 from the, we have done that also already. And I will, that closing inventory cost of sale minus 14,950, the inventory portion. The inventory cost of sales to closing inventory, the inventory which has been recorded 54,000 rather than 39,050. Because of that, the inventory has been overvalued. So 14,950 should be subtracted from the inventory and from the profit also. So the profit will be 105,450. Okay. Next is going to be the issue of share, which we have done. Normal issue. The normal issue we have done, that is 60,000 at 1.3, right? So 60,000 is the amount of share capital. And 18,000 is going to be the share premium. Okay, now we are going to go for the bonus issue. And bonus issue, the adjustment is given that 1 for 10. Why I'm opening again on this one? 1 for 10, right? For the previous, on the previous issue, that is 4 lakh. So I will do 4 lakh divided by 10. So the bonus share is going to be 40,000 and that will be taken out of share premium because we have enough premium available and bonus share can be issued from the share premium easily. So I will write, subtract 40,000 and I will add 40,000 in the share premium account. Then comes the dividend paid. The dividend paid, not the proposed, only dividend paid will come. Let's see the amount of dividend paid. Because statement of changes in equity is prepared, but it is wrong actually. They have treated the bonus share in a different manner with multiplying it with 1.3. 40,000 into 1.3, 52,000 they have taken and they have subtracted also in a wrong way. Dividend paid is 60,000, dividend proposed will not come. Revaluation reserve will come definitely. I will write it. So dividend paid is going to be subtracted with an amount of 60,000. Now comes the revaluation reserve for land. So that will be written in the revaluation reserve account, 35,000, and it will also be written. So it will also, but that's it. Okay, it will be written in the revaluation reserve, and that's we have done with the statement of changes in equity. So what are the new correct values? If you can inform me, that is easy to inform the correct values of the statement of changes in equity. For first, it is going to be 5 lakh for this portion. Then for this, it is going to be 10,000. The remaining 35,000 is for the and retained earnings. We are going to have 194,850. Right? Now I have to prepare the statement of financial position. So let's prepare the statement of financial position. I will start from non-current assets. If you just look at the non-current assets, that will be written like land and building is given or non-current assets. We subtract that. You have already told me that you will subtract the amount that is 638,800. How come, sir? Because we have to subtract 1,600 and then again 1,600. 642,000 is the non-current assets minus 1,600 and again 1,600 because we have to give the effect retrospectively. Then I am going to write the current asset. It includes the closing inventory, trade receivable, and cash equivalent. So closing inventory, now it is going to be 39,050 after subtracting. Trade receivable is going to be 226,000 and cash equivalent will remain the same, that is 60,500. Now I can calculate the total assets easily. The total assets is going to be how much? Total assets will be 964,350. Let's see the question again. If you just look at the trade receivables, they are the same. 226,000. Cash and cash equivalent remain the same, 60,500. Inventory, 54,000 minus 14. What was the amount? 14,950. Right? So that will be the correct value of closing inventory. 14,950. That's it. Okay. So now I'm going to write the equity and liabilities section of the balance sheet. Spelling has done mistake, no problem for that. Ordinary share capital, then we will write share premium, and we will write revaluation reserve. There is no change in that because we have already calculated them in the statement of financial position. So ordinary share capital is going to be 5 lakh, share premium 10,000, revaluation reserve is 35,000, and retained earning is 194,850. Total is going to be 739,850. Now I am going to write the non-current liability section. Non-current liability is 8% debenture basically. So let's write 8% debenture. That is going to be 50,000. Because 52,000 was wrong, we have to write the correct figure, and that will be our correct figure is going to be, that is 50,000, because the 2,000 is the accrued debenture interest, which should not come in the current liability. Same is the case with the amount we are supposed to write in the current liability. That is trade payables. Let me write it down. If you have any problem, you can ask me. Trade payable, that is 152,000, and other payable, which needs some adjustment also, that is going to be, I'll do that right here. 63,000 is the amount of other payable. How come, sir? I will make you see. Trade payable 152,000. I have written in the same manner. Other payable 63,000. I will do it. 63,000. I will subtract first the 2,000 accrued debenture interest. Okay, that will be written, added, and the proposed dividend will be subtracted. Accrued debenture interest 50,000 over here. That was 52,000. वहां से माइनस हुआ, यहाँ पे ऐड हो गया, और यहाँ से माइनस कर देंगे 42,500. क्या भला? प्रपोज डिविडेंड जो आपने गलत ऐड कर दिया है, जो इसका हिस्सा नहीं है, तो आ जाएगा 22,500, and the total is 174500, and now the total of both the sides will be equal. Total assets and total liabilities is going to be equal, right? So Just try to do it little quickly because of the shortage of the time. But we are done with that easily. And we have solved this question. Okay. 42,500, I just want to make you see again over here. Other payable 63,000 included the proposed dividend of 42,500. It should be written as a footnote. That's it. So 63,000 may I need to subtract 42,500 plus 2,000 because accrued debenture interest has been subtracted and now it is going to be written in current liability. So that is why. अलग भी लिख सकते हैं आप, वो आपकी मर्जी है. 52,000 minus 3,000. So we are done with that. Thank you. Totally same. I don't have the place. That's why I have not written the answer. कोई problem है? Any problem you can ask me. You can WhatsApp me on my number. So this is the question we have solved. Prepared this May, June 24, 32 from International Accounting Standards. And now we are finding such type of questions coming in the exam also, most of the time.